What is up, YouTube? So today is Sunday, the 18th of January. I'm going to do a trade recap of the week just gone, looking at the trades I took, why I took them, and why I would look for them over and over again. So we actually ended up with 2 winners and 2 losses, which meant I was actually up 4.3, 4.4 times my risk at the end of the week, which is really nice, kind of close to the week. Both of those winning positions were on the Thursday and the Friday, so quite a nice way to finish off the week, considering December was quite poor and slow, and quite frankly not many winners. So January was to start in this way is it's quite hopeful for the year ahead. So without further ado, let's get into this. I'll move myself out of the way, put myself in a corner like that. That'll do. So we'll start on NAS and then we'll kind of backtrack into EURUSD at the end, simply because I'm already on NAS and it's just easier. So let's skip past. Let's go there. Right. So starting on a 4-hourly on NASDAQ. Let's just get rid of everything. There we go. So first of all, on a 4-hourly on NASDAQ, what was I looking for? I always want to identify my higher time frame bias first and see if I can align things going kind of down from there. So if I always tend to go 4-hour, 1 hour, 15. And from there, I go on my entry time frame being 5 minutes to look where I can get in using my mechanical entry model. So looking at price action over the last few days on NASDAQ, we took out these highs. So after we took these highs, we then took the last strong low here. That was our break of structure. Why was it a strong low? I think we had a high, a low, a high, a low, and another higher high. So the last strong high before this low, last strong low before this high was this one here. So if we broke that, then that gives a strong indication of price wanting to move in the opposite direction. So given we've got this first indication of price wanting to start rolling over potentially or start moving in a bearish fashion, so from my swing high to my swing low, I can move that to fib rather than entries. You can see that we were well into the premium of this swing. As you could say, we were overbought potentially. And this is where I started looking for areas of interest that I could potentially trade away from. So we had this last order block, which was not quite mitigated in here. And this is where I was looking for price to show me some sort of reversal signal. So I scale down to the 15-minute. I mark out my session opening time, which is 2:30. All I was waiting for is a sweep of previous session liquidity. So if we were up here, I was looking for a sweep in past 2:30 anyway. So if I click through, get to 2:30. So there we go. Get this out of the way. So I was looking for a sweep above the 215 high. Pretty tiny sweep, but we do get it in there. So if we just mark out our next relevant low on the 5-minute, there we go. See that we're waiting for the break of structure or the candle body close after this being the last relevant low before the high was formed. So I'd mark this out as my break of structure. I simply trail this down with each wick until I get a body close through to confirm that price is ready to start moving in that direction. So before we get there, can we see any additional confluences? So if I go zoom out a little bit, you can see price was actually drawn to taking out all of these equal highs, which was the previous day's Asia high. And it also tapped into this inverted fair value gap to retest, and we got that strong rejection away, which was another confluence that price was ready to start changing direction. So with this picture painted now, and all I'm waiting for is my entry model, I'm simply waiting for price to break this previous low and then retrace to my entry level, where I can then catch the short using a limit order and simply trade to a 1 to 3 or to the next relevant draw on liquidity. So we had to wait a while, as you can see, but we did get that in here at 3:45. So it's at this point that I draw out my fib tool for my mechanical entry model. Swing high to my swing low. I'm simply waiting for retracement around the 55% retracement area, and if I can align it to an order block or some sort of point of interest, it's simply an added confluence and an added bonus. So I was simply waiting for a change of character or a change in direction on the lower time frame at this level. So it's actually a 3-minute. In this case, if I play price through, you see that we get that push into the point of interest. When I scaled down, I was simply waiting for price to shift within here. That's where we get that failed break of structure. The entry on that engulfing candle, my stops above the high, targeting 1 to 3. In this case, I believe I actually managed to squeeze a little bit out on a 1 to 3.5 R. So I was just targeting this level in here as a retracement of this leg. So I'll let price play out. We can see exactly what it did. See, we're in drawdown for a little while, but that's okay. You know your data. If I know my data, that is completely fine. I'm happy with taking losses. I'm happy with being in drawdown because I know over the long term that my data simply plays out. And I can go for a string of losses, but I also go for a string of winners as long as I standardize what I'm doing and I keep what I'm doing the same and stick to the plan at the end of the day. So as you can see, this trade went pretty much straight to take profit after a little bit of drawdown, and that was perfect because I was not even monitoring this trade. I then came back to it at around just before 8 and saw that I was essentially at take profit. So happy days, went to bed happy. Doesn't get much better than that. So let's get on to the next position. So now we're looking at the next day. With the same bias and higher time frame narrative in mind, I was simply, get rid of this flip tool. I was simply waiting for price to retrace within this mid time frame swing and demonstrate an ability or a sign of price wanting to move the opposite direction, exactly the same as the day before. So during Asia, price had rebalanced from the previous day's expansion, giving me the confluence and the trade idea that price was potentially ready to either expand again or have a second leg to the downside, given we have already rebalanced during the previous session. With that in mind, my next step was to identify an area of interest. And as you can see, we have this fair value gap, and we also have this order block. So given the order block was the stronger point of interest, this is where I was waiting for price to trade from. However, I did take a loss on the way up to this position. So if we play price through, get to why I took the position I did. So if we mark out London Open at 8 AM, all I'm waiting for is a previous session sweep followed by a market structure shift, just like the other day or the day prior, and just like I do every single day. So let's wait till we get that. So here we get the sweep. Now I'm waiting for price to break structure to the downside. get the break in there. That's where I set my fib tool to my MAC entry. My entry was at the 55% retracement, my stop above the high. I was targeting a 1 to 3. And if I play price out, you'll see that this did not last very long. So there you go, pretty much. Basically no profit or no positive equity. It was essentially straight stop loss. That's fine. So a losing trade in London, same trade idea going into New York. Same bias of wanting to see price roll over from here, targeting the external range liquidity. It's given we've got the same trade idea, the same bias, nothing's been invalidated yet, as our strong high is this previous day high. We mark that out as strong high. So now we're deeper into our point of interest. Simply wait for price to come into that point of interest, into our session kind of kill zone, and see what happens. So just wait for price to play through. So as you can see, after a slight technical difficulty, prices eventually got to the previous or to the New York Open. So let's see what happens around New York Open and see if we take out this London high, getting previous session liquidity, and we're targeting the external range liquidity. So let's click through. As you can see, we get that initial injection of volatility pre-market open around 5 minutes before, and as the market opens, we sweep those early buyers or early sellers as well, giving us confirmation to wait for price to essentially break structure and give us a demonstration of price wanting to turn over or give us indication of wanting to start moving to the downside. Given price was moving so volatile at this moment and the tendencies that NAS has, what's the likelihood of price breaking, retracing to around 50%, which is my typical mechanical entry, and then continuing down? When price is extremely volatile, like NASDAQ is at the market open, 9 times out of 10, it simply does not come back to that entry level, meaning that in this occasion, I actually entered on the change in state of delivery rather than the retracement, simply because of the amount of momentum and volatility in the market. So I set my limit at the change in state, my stops above the high. Like I said, I was going from IRL, so internal range liquidity, to EURL, which is previous day low. Gave me about a 1 to 3. Pretty perfect. If I play that out, you see that it was more or less no drawdown. There was no drawdown. Straight to take profit, literally no drawdown. So NAS did as well this week. EU not so much. So if we go to EU, I'll go over the loss that I took on Wednesday. So we're starting on a 4-hour on EURUSD. Same approach as NAS. I'm looking to build a narrative on the higher time frame and then start working my way down from the 4-hour to the 1-hour to the 15 to find order blocks, points of interest, and simply a bias that I can align on multiple time frames. So from the hourly, or if we start on the 4-hourly, you can see that quite obviously price was moving down. We were making lower lows, lower highs, lower low, lower high, lower low, lower high, lower low, lower high. You get it. So on a 4-hourly, I was bearish. Given I was bearish on a 4-hourly, let's see if I can align that on the hourly time frame. Most recent break was to the downside here. I was simply waiting for price to come up into an area of interest, which was ideally here. Give me a and give me an indication of price wanting to turn over and follow my bias. So this was my ideal place to catch the reversal from. So now on the entry time frame being 5 minute, all I'm waiting for is a sweep above Asia high, followed by market structure shift and my mechanical entry to catch it to the downside. So on a 5 minute, you can see we have this inverse fair value gap, which I was actually looking to catch shorts from at that moment in time. You see we got that right there at around 7.25. From here, I was waiting for price to break this fractal low, which we got right there. So when I set my fib tool, I set my position as I always do, with a 1 to 3 in. As you can see, we've got a nice tag, but it just did not play out in our favor at that moment in time. Yes, guys, so I hope you found this useful. If there is something you want to listen to or watch more frequently, do comment down below. Open to more pointers, open to different ideas around what you would find useful. So, like I said, post it down below. Look at my other social media links. Feel free to DM me on there. Do as much as I can to get back to you guys. And again, subscribe if you like this content and follow for more.